Welcome to Nerdbull1669 Weekly Trading Outlook tips for this week, 23rd to 27th of February 2026. Before we move to this week, right, the trading week for the week of 16th to 20th February 2026 was characterized by the high volatility as the market grappled with a perfect storm of geopolitical tension, shift in the trade policy, and also the mixed economic signals. So we should be expecting Monday and Tuesday to be dominated by the positioning for the PPI data and also Trump's State of the Union, with Wednesday evening having where Nvidia earnings, acting as the binary clearing event for the entire tech sector. So if Nvidia were to fail to ignite a risk-on spark, the current volatility regime, right, suggests a test of the 6,800 support level for the S&P 500 is highly likely. So coming to the market summary of 16 to 20th February 2026, the major indices finished the week mostly in the red, despite some midweek attempt at a rally. So S&P 500 actually ended the week around 6,861, down approximately 0.2% on Friday, struggling to maintain the momentum after a choppy session. So as for the Nasdaq Composite, right, it closes at 22,682, down by 0.3% for the week, and way down by the software sector and uncertainty surrounding the AI next growth leg. So the key drivers basically was geopolitical politics. So tensions between the US and the Iran escalated after the disagreement over the nuclear program. Crude oil prices surged over 5% for the week. So, and then we also have the tariff shock. The Supreme Court actually ruled against President Trump's initial global tariffs, prompting him to immediately announce a new 10% global tariff plan under the Trade Act of 1974. So at the time of this recording, we understand that President Trump has actually raised the global tariff, right, to 15%. So as for the next one, the factor will be the mixed data. So Q4 GDP actually came in soft at 1.4%, partly due to the government shutdowns. So while the PCE inflation data came in hotter than expected, cooling hopes for the early Fed rate cuts. So as for the weekly outlook for this week, 23rd to 27th February 2026, traders are actually entering the week, final week of February, right, in a defensive couch. So the focus is squarely on Nvidia's earning, which is happening on the 25th of February, Wednesday, and the risk of a military strike in the Middle East as well. So for the S&P 500, right, okay, trend continuation relies heavily on the index reclaiming the 6,900 level. A failure to hold the 6,800 level during the PPI release, right, or the Trump State of the Union address on Tuesday could actually trigger a slide towards the 6,750 support zone. So for the Nasdaq Composite, so the Nasdaq strength, right, actually need a decisive cross above the 23,100 to signal the AI trade is back on. So if the software drag continues and Nvidia's guidance is anything less than stellar, a drop below the 22,400 invalidates the short-term bullish thesis. So appreciate if you could share the thoughts in the comment section on this video, and then do help to like and share this video. We greatly appreciate your help. So for the disclaimer, the analysis and the result presented does not recommend or suggest any investing in the same stock. This is purely for analysis purpose. Appreciate if you can like and share this video if you find this video useful and helpful for you. Thank you for your support, and we look forward to you supporting the channel for more content. Now coming to the macro snapshot, which is context only. So as for the risk appetite, right, we're actually looking at a wait and see defensive. So the current status is actually resource selective. So so the risk appetite is currently fragmented, while the S&P 500 right remains near the all-time high, approximately 6,861. So the under the hook sentiment right is cautious. So for the safe haven flows, right? So gold has surged past the $5,000 per ounce, hitting approximately $5,017. So as traders hedge against a potential Iranian attack on the energy infrastructure. As for the next one would be the Nvidia premium. So traders are actually de-risking ahead of the 25th of February earnings. So the sentiment is actually that Nvidia must not only beat the expectation but also provide guidance that offset the AI fatigue seen in other big tech names. So for the rate direction, the wash factor and the inflation. So current status is higher for longer, which means a pause. So the narrative of a aggressive 2026 rate cuts is actually fading. So for the Fed policy, so market-based measures now indicate only one or two 25 basis point cut for the entirety of the 2026, a sharp reduction from the January expectation. As for the new guard, right? So with Jerome Powell's terms nearing its end, which is coming to in May 2026, right? And the nomination of Kevin Walsh, the market is actually pricing in a potential shift towards the quantitative tightening QT or a more hawkish stand on the Fed's balance sheet, which is pushing a long-term yield, the 10 years yield and the 30 years yield higher. And next come the PPI outlook, which is happening on this Friday. So if Friday's PPI producer price index actually shows sticky input costs, this especially driven by the recent 5% jump in the oil, expect the higher for longer narrative to solidify. This will put immediate pressure on the growth stock multiples. Okay, next come to the volatility regime. So current status is actually elevated, expanding. So we would see that this is the end of complacency. The volatility regime actually transited from a low VIX, which is less than 15%, to tactical a high of VIX 20 plus. So the term structure, so the VIX term structure is actually flattening, showing that the market expect right heightened uncertainty to persist into March and April. So as for the pullback risk, right? So prediction market like the Kalshi currently showed a 58% probability of the S&P 500 correction, which means that a 10% drop might be possible, occurring in the early 2026. As for the tail risk, right? So the new tariff plan announced by the Trump administration add a policy shock, right, layer to the volatility as traders try to calculate the impact on global supply chains and also the corporate margins. So now coming to the really outlook for S&P 500 for this week. So the S&P 500 trend continuation relies on the index reclaiming the 6,900 level. So a failure actually to hold the 6,800 during the PPI release or the Trump's State of the Union address happening on Tuesday, right, could trigger a slide towards the 6,750 level support zone. So for the trend status, we're actually looking at neutral, cautionary. So for the pullback risk level, we are looking at 6,750. So for the trend continuation, which is a strength above 6,900. For the pullback risk, right, we are actually looking at failure below the 6,800 level. Now coming to the weekly outlook for the Nasdaq Composite. So for the Nasdaq strength, right, we actually need a decisive close above the 23,100 level to signal that the AI trade is actually back on. So, but if the software drag continues, right, and then Nvidia guidance is actually anything less than stellar. So we might see a drop below the 22,400. This should invalidate the short-term bullish thesis. So for the current trend status, right, we're actually looking at a very fragile uptrend. So the full pullback risk level is actually looking at the 22,200 level. So for the strength above 23,100, so failure below 22,400 might be expected for this Nasdaq. Okay, now coming to the weekly levels for the individual stocks. So the first one to go will be Nvidia NVDA. It's actually having earnings on the Wednesday, 25th of February. So we actually expecting a bullish bias, right? Looking at above a break above the 190 level. This should actually lead into earnings, suggesting a bid and rise expectation towards the $205 resistance. So the stock right is currently oscillating near the pivot of $187. So a break above the 190, right? Which you actually mentioned earlier, leading into what will suggest a break and rise, and then expectation towards the $205 resistance. So for the invalidation side, right, we're actually looking at below $181, a close below the $180 to $181 support zone S1 would signal that the market, right, is actually de-risking the AI sector, potentially exposing the $172 200 days SMA, as you can see in the chart. Yeah. So now coming to the next stock for the week, the weekly level for Google, GOOGL. So for this at the bullish bias, right, we're actually looking at above $330. So after consolidating in the lows of the 300, right, Google will need to reclaim the 50 days SMA near the $330 to shift the sentiment back to positive. So for the invalidation, we're actually looking at below $205, breaking the psychological level of $300, and also the recent support at 300 and 305 would actually suggest a deeper correction towards the $209 dollars area. So this is one of the hyperscaler that we are looking at, how is it will be affected by the release of the Nvidia earning on Wednesday, 25th of February. So coming to the next stock in the list, so we're looking at Beatrice, VTRS weekly level. So for the bullish buyers, right, we're actually looking at above the $16.30 level. So VTRS actually show a pretty strong momentum, up already 11% in the past 2 weeks. So breaking its 52 week high, right, at $16.30 cents, right, which actually signal a continuation towards the $20 target. We can see that it's actually currently trading rather, I would say, sideways or range bound. So for the invalidation, we're actually looking at below $15.50. This is the critical support level. So a breakdown here would actually issue a sell signal, and then this indicate the recent rally has actually exhausted for VTRS. So coming to the last stock of the list, we are looking at Vertex Holdings, VRT. Sorry. So for the bullish buyers, right, we're actually looking at the level above the $255. So following its explosive earnings earlier in the month, in February, so VRT is actually consolidating near the high. As you can see now, it's actually trading range bound. So reclaiming the $255 would suggest a move towards the analyst target of above $280. So for the invalidation, we're actually looking at and below the $230 level. So despite the strong guidance, right, a drop below the $230 level, which actually indicate that the AI infrastructure premium, right, it actually being trimmed by macro fears. So now, coming to the summary for the week ahead. So we should be expecting Monday and Tuesday, right, to be dominated by the positioning for the PPI data, and also the Trump's State of the Union, especially Donald Trump, the situation with Iran, as well as President Trump, tariff decision and movement. So and also with the earning for Nvidia happening on Wednesday evening, see, this is acting as the binary clearing event for the entire tech sector. So if Nvidia were to fail to ignite a risk-on spark, right? So the current volatility regime, right, which actually suggests a test of the 6,800 level support level for the S&P 500 is highly likely. So a bit of the risk management framework. So these are the three things that we should always keep in mind. So trade levels are not the opinion, and we should define the invalidation before we entry, and then also reduce size during the consolidation. Do practice discipline and patience wait. So this video is actually for educational content only, and it's not financial advice. So the disclaimer, so the analysis and the result, right, as you presented, does not recommend or suggest any investings in the state stock. So this is purely for analysis purposes.